Hi, welcome to my show. This is Dr. Prakash. And as usual, I'll start presenting my charts here. So let me share my charts. So these are the charts I'm going to share. All right, I think you can all see that. Okay, so these are my stock picks for February 5th. I'll go through the stock picks shortly. And before that, let me go through my disclaimer chart, which basically says, stock market investing is somewhat risky and the final decisions are your own. What I'm saying here is for educational or informational purposes. Okay. All right. So how did the market do last week? So there were three things that happened last week. One is the Fed chairman came and gave a speech after raising the interest rate by 0.25%, which was expected. And the market interpreted that as dovish. They thought the Fed was dovish. They were expecting him to be hawkish, but they were pleased he was dovish. Now, of course, all the big tech, Apple, Amazon, Google, and then Meta came and gave the guidance. They were not very good. The guidance was actually soft. However, the market was relieved because maybe it was not as bad as they expected, right? And in terms of Meta, they kept saying that they were going to cut their costs, especially the CapEx, and they were going to focus on efficiency. And the market read that as profitability, and so they were pleased Meta took off. So you can see the market, which was somewhat flattish the first 2 days, just took off Wednesday and Thursday. And on Friday, we had the hot employment data. The employment numbers were much bigger, much stronger than the market was expecting. So they got worried a little bit. Maybe the inflation is still hot. Okay, so that's a little bit of a worry, but did not go a lot. But overall, the market had a very good week last week. And so far, the market has been going up, pretty good. So the question is, will it, keep moving up? What is the prognosis for the next few months? Now, in the beginning, when the Fed starts increasing the interest rate, the focus is always on the interest rate. But later on, towards the end of the interest rate cycle, the market starts focusing on earnings. So there's still a pretty good possibility that over the next few months, the market will come back to the fundamentals like the earnings, the price to earnings ratio, cash flow, and things like that, which are all going to go down. And so there's a good chance that the market will start going down over the next few months. Okay. All right. So here are the stocks I want to talk this week. There are 5 stocks. All of them came up with their earnings, last week. And 4 of them are technology stocks. One of them is a material stock. So the 4 stocks in technology sector are Apple, Amazon, AMD, and Google. So Apple, the iPhone company, Amazon does many things. The Amazon Web Services is a cloud business they have. They also have, other prime services like video. And of course, they're the biggest e-commerce company in the world. And AMD, which is a semiconductor company, which makes chips, both for consumer PCs and for enterprise servers, right? And then Google, and you all know what Google is. And all of them, as I said, give softer guidance. However, the market, liked their guidance because they thought, it has bottomed, the earnings has bottomed, it's going to take off in the next few quarters. So the stock went up for all these companies. So what is the consensus earnings for these companies? So if you look at Apple, it's around 6.1, Amazon is around 1.6, and then AMD is around $3, and Google is around $5. And if you look at their PE, the price to earnings over the last 12 months, it's 25 for Apple, 92 for Amazon, 54 for AMD, and 20 for Google. So Google looks like the most reasonably priced stock, whereas Amazon looks like the most expensive stock. and so is AMD. And Apple is a little bit expensive, but on the other hand, Apple has one of the best cash flows, and it's a very well managed company. Unlike Amazon and Google and Microsoft, which came out last week with their earnings, Apple did not hire a lot of people. They did not overhire. So they're managing the headcount very good. They're not laying off. Whereas Amazon and Google, they hired too many people. So their costs are high now. They're cutting costs, right? So what is the model saying, the P, in terms of going forward for the next 12 months? So the forecasted P for Apple is 21 to 30, which means the price and the stock price for Apple can be anywhere between 128 and 190. So when the market is in a bearish mood, is worried about inflation, worried about earnings, that type of thing, or any external event happens that could upset the market, Apple will go towards 128. And when things start, getting better, especially in terms of the economy, it will start going up. And over the next 12 months, when it's in a good mood, the market is in a good mood, it could be as high as 190. So when is the good time to get into Apple? So whenever Apple has, a bearish trend, and whenever it goes below 135, you should be grabbing Apple. Okay. Amazon, will continue to have a high multiple because, people still think that, AWS is going to grow a lot. They will overcome their problems in the e-commerce business, right? So they could get a P, the forecasted P is 50 to 80. So if it goes to 50, you're talking about an $80 stock. When it goes to 80, you're talking about $128 stock. So again, when is a good time for you to buy Amazon? When it is less than 90. AMD, the model as 25 to 45 in the P, right? Now, semiconductor stocks usually get a high PE, and because these semiconductor products are used everywhere, not just PCs and servers, in the AI business, in the cloud business, everywhere they're used. Cars, automobiles, right? So the range for AMD forecasted is $75 to $135. So whenever AMD goes below 80, that's a good buy. Now, the semiconductor stocks tend to be very volatile because, the demand could change abruptly. The inventories could build very abruptly. So the stock goes up and down. So there'll be plenty of opportunities for you when AMD is lower. Google, on the other hand, is a more stable company, and their PE is modeled between 19 and 25, which gives us a price of 90 to 125. So whenever Google goes below 100, it's a good buying opportunity, right? Right now it's 105, not too far from 100. So within the next few weeks, it'll start going below 100. All right, so now let's look at the last one, the APD, Air Products. It's a chemical company in the sense that it makes special, as the name itself tells you, industrial gases, like nitrogen is one of them they make. Now, the demand for these gases is going up, and so they're in a good business. And also, they pay a very good dividend, and they keep growing the dividend a lot. So because of that, it's seen as a growth and income business. And as I've always told you, in your portfolio, you need to have exposure to all the sectors. So you need to have some exposure to the material sector. And the S&P 500 is around 2.5 to 3% in terms of material sector. So you should at least stay at the allocation level, which is close to S&P 500 market allocation. Okay. And as I've always told you, watching your allocation is very important. If you get allocation, very heavy in one sector and very light in other sector, then your portfolio eventually will lose compared to S&P 500, and that's no fun, right? All right. For the APD, the consensus for the EPS this year is more than $11. And the past PE for the last 12 months was 28. But for the forecasted PE is between 20 and 30. So that gives you a band. They can go as low as 226 and as high as 339. So where is the buying opportunity? Whenever it goes below 240. And you will have those opportunities, in the next few months. Okay. All right. So let's go by, all these stocks one by one, look at their performance over the last few months, and it gives you pictorially how these stocks have behaved. So here is Apple. So, Apple is a great company, and, it comes to around 7% of the S&P 500 in terms of market weight. So everybody owns it. So, but you can see last year it had several ups and downs. It went up, it came down, it went up, it came down, and things like that. Now it's in the upswing now. But even with the upswing, right now it is below where it was here. Here it was around 179, 180, but right now it is around 154. That's what is shown here, right? So it will probably have a similar behavior this year, and it probably will have a very similar, highs and lows. See, the last year low was 124. For the next 52 weeks, we are modeling 128, and the high will be somewhat better because last year we were looking into getting into recession, getting the interest rates higher, etc. This year we are looking into getting out of the recession. We know there will be a somewhat, shallow recession this year, maybe in the third quarter and fourth quarter. But we know by the end of the year, we are looking at getting out of the recession. So the highs will be somewhat higher, 190. So as I said, even if it falls below 135, you should start buying this stock. Okay. The next one is Amazon. So the Amazon, has had ups and downs, but you can see the trend has been going down. If you were to draw a trend line here, it's just going down. And I think the trend will continue for another 2 quarters. So it won't hit as high as 170 where it was in the beginning of the year, last year. So it may go to 128, even maybe 130, 135. So when is a good time to buy this? When it is less than $90, right? And you'll have that opportunity in the next few months. All right. So let's look at our third technology stock, which is AMD. And you can see even AMD has gone through ups and downs, but AMD's trend has been going down. And I think it bottomed here somewhere between November and December. Now it has started going up with the hope that things are going to improve in terms of demand. But again, it's going to have ups and downs next year, this year, in the next 52 weeks. And the highs and lows are modeled as 75 to 150. The low is better than the last year low, and the high is better than the last year high. So whenever it goes below 80, it's a good time to buy this stock. All right. The last technology stock this week is Google. And again, Google, you can see, is going down. The trend is going down. It just looks like it may be turning upwards, but again, it will come down in the next few months because the ad revenues are going to go down over the next 2 quarters. So the forecasted 52-week range is very similar to last year in terms of low. Low last year was 83. This year it may be 19. And then the high is going to be less than what the high was last year, which was actually in the beginning of the year, right? So whenever this stock goes below 100, it's a good time to buy. All right. So let's look at APD. So APD are Air Products. You can see it was very high towards the end of 2021. And then as 2022 started happening, it crashed because earnings were not meeting the expectations and the interest rates were going up at the same time. And it basically stayed in that valley for a long time. In October, it started coming out. Late October, it started coming out. And people thought that the problems were all gone. But the earnings that came out were not as good as people were expecting. So it started coming down. So again, for this year, it's going to have, up and down, depending on the economic data, because this stock, being an industrial gas company, they're very sensitive to industrial production and demand. So, over the next 2 quarters, that demand may go down a little bit. So you will have a lot of opportunities to buy this stock when it's lower. So when it goes below 240, it's a good stock to buy. And as I said, they pay a good dividend. Today, they're paying $7 per stock, which is not bad. And they will increase it every every 12 months. So that's a good thing. Okay. All right. So that is it for this week. So for next week and the week after that, there won't be any presentation. I'll be off. And when I come back, we'll discuss how the market has behaved, when I was not presenting, and maybe we'll get more insights and more stock picks, more good opportunities for us to buy the stocks. Okay. Thank you very much. And here is my last chart. So as I say, no video for next 2 weeks, back on February 25th. Okay. Keep that in mind. And, please subscribe to my channel. Okay. Thank you. All right. Bye.